Marley Kayden, host of Market on Close, is with me to talk more about this. Good morning, Marley.
Good morning, Nicole. Yes, like you mentioned, the Alphabet Cloud division has given us a look under the hood in terms of what they have contractually coming up and some potential revenue numbers for them as well. The Cloud division CEO says that his unit has up to $106 billion in commitments from existing contracts that it has yet to fulfill, adding that at least 55% of those, or what would be the equivalent of $58 billion, is expected to turn into revenue earned by the company over the next 2 years as those services are delivered. Now, Alphabet is, of course, among these tech companies racing to build out data center capacity in order to serve this growing demand for AI processing. Now, they are in third place behind Amazon and Microsoft, but Google Cloud is still viewed as one of Alphabet's strongest sources of growth as it's their main search business matures. Now, the cloud division generated revenue that jumped 32% to $13.6 billion in the second quarter. That was released in July. Now, and Google Cloud has achieved annual revenue run rate of over $50 billion, so they are performing well. These comments from CEO of that cloud division, Thomas Kurian, came at the Goldman Sachs Communacopia and Technology Conference in San Francisco, and he said, quote, "It's growing faster than our revenue. Not only are we growing revenue, we're also growing our remaining performance obligation." And like you said, Nicole, they're trading near all-time highs. Their all-time high of 240.47. Right now, they're at 239.90, so very close there. And shares are still elevated after they've up more than 13% since that DOJ ruling came down. So, we are seeing a big boost from Google on this note. And interestingly, following Oracle disclosing some really positive revenue numbers yesterday as well.
Yeah, understood. I mean, when we think about some of the other competitors and such, the big picture here, Oracle knocking it out of the park, and cloud growth just has been such a big driver for these mega caps, right?
It most certainly is. We had Oracle's earnings live on Market on Close yesterday. They did post a miss on both the top and the bottom lines, but shares are up, they're up 37% right now as their cloud revenue, this same story we're talking about for Alphabet and for Google, will skyrocket to what the CEO says is $144 billion by the year 2030. They had a huge jump in bookings from what the CEO called a who's who in AI. Infrastructure revenue expected to grow 77% to $18 billion just this fiscal year alone. And we're talking about those remaining performance obligations, another metric that's being so closely watched and part of Google's move this morning. For Oracle, they increased their backlog by 359%, Nicole, to $455 billion in just the first quarter, adding that they expect to sign several additional multi-billion-dollar customers and for their RPO to exceed $500 billion. So this just continues to show this growth driver in this AI compute race and this data center race and cloud services. It's not going anywhere anytime soon.
Yeah, understood. And just like a final thought here, when you think about the action we've seen on these mega cap names, the Mag 7 names, I mean, we just had on Arun Sundaram, who was out here talking about a strong buy on Amazon, and a lot of excitement around Apple yesterday. I know it certainly wasn't the AI, wow moment, but, at least there was something that came out of Apple. So, Mag 7 names still showing strength.
It wasn't the AI moment that I think the street was hoping for, Nicole. But as we've seen from Apple in the past, even if they hold back behind the rest of the field, they always somehow catch up. So I think everybody's just waiting to see if it will historically be how it's been for them. But, as I take a look at the Mag 7, bit of a mixed performance today. Apple remains down, Amazon down, though, as well. But, Google, despite being behind Microsoft and Amazon in terms of cloud services, certainly with their DOJ issues behind them, a company potentially to keep an eye on, because I think a lot of the hesitation around them was involved in those lawsuits. And now that they're settled, it'll be interesting to see how their performance changes going forward.
All right, Marley Kayden, it's great to see you. Thank you so much. Appreciate it. Good luck there at Google and the cloud division commitments that the company has. Alphabet now at 240.40, up 1/3 of 1%. Scott Bauer, CEO of Prosper Trading Academy, is with us. And you have an example trade for us on this name. I'd like to hear more about that, Scott.
I do, Nicole, and it's good to see you again. With Google trading, Alphabet trading really at those all-time highs after this massive run that we've seen. typically, historically, I don't like to buy into that strength. I like a pullback. However, boy, this stock, and as you and Marley were just talking about, the outlook here is really fantastic. So I do like the upside. I am a little cautious about it. So I am going to take a little bit more cautious of an approach here rather than just buying a call spread or buying calls. What I'm going to do is actually buy what's called a diagonal call spread. Gives me a little bit more room to play with here. So what I'm doing is I'm selling next week's 250 strike call. I'm going out a month to October expiration to buy the 245 call. Do that for about $4.75. And what it does is if Google doesn't move in the interim or even goes down just a little bit, it gives me the opportunity for an entire month to roll out and to sell more premium against my long call that I own out in October. And if Google is just a straight shot up, it's a straight, line to the upside, that's a winning position as well. So this is a way to take advantage of a directional position. In this case, it's a bullish position, but just not be as super aggressive as just buying calls or buying a simple call spread.
Understood. Okay. Thank you for that. There's been a lot of excitement surrounding that name, so a good example trade there. What are your thoughts, big picture on the market? The S&P 500 hit a record today, all-time record high. I mean, Google's not far off the highs. Oracle new highs.
It's the most hated rally that we've seen, and we've said that in the past, but this one, it's the most hated rally that we have seen. There is nobody that I know that had this move in Oracle on their bingo card. And macro, it's unbelievable because we're getting a weakening economic picture. We really are, and we know what the Fed is going to do next week, and they're setting the table for more potential cuts, but yet the market keeps on climbing. And I think that's all on the heels of the AI trade and the cloud trade. It was just a couple weeks ago, people were saying the AI trade is dead, right? People were rotating out of some of those stocks. And yet these big companies, the big ones in the game here, boy, they are just knocking it out of the park and carrying the market higher.
Listen, we're approaching the 3-year anniversary of the bull market rally, which began back in October of 2022. And the question then becomes, does this bull market rally continue into the 4th year? What say you?
I do think right now you have to be cautiously optimistic. What do I mean by that? It means stay in your long positions. I am, but I am also buying that protection because now we're seeing volatility come back a little bit. The VIX, went up a little bit over the last couple of weeks. Now it's settling back in. Really good opportunity to get some protection in positions. But if we can, take out the daily movement here and look through the weeds or so, boy, I don't know. This market is just Teflon, and I think we move higher into the new year.
All right, Scott Bauer, CEO, Prosper Trading Academy. Thank you so much. Great to see you, Scott.